are joined by Olivia from LGT. Thank you very much for joining us. And we've got Tom here from our southern office. And for those clients of ours that have their money invested with LGT, could you just explain how much research goes into the portfolios and how much work is done behind the scenes that they won't necessarily see?
Yeah, of course. So one of the benefits of investing with LGT or, a kind of a wealth manager is that we have a dedicated research function. So we've got about 20 analysts in total that are career analysts. So they're not portfolio managers. Their role is to provide their top recommendations within equities, within bonds, within funds. And we also have a dedicated macroeconomic team, which are giving their outlook on markets and helping us to kind of determine the short-term positioning within portfolios. So a huge amount of research internally. And then on top of that, we also spend a lot on research because we want to ensure that there's no herd mentality. It's very, very easy for an investment committee to get to become a bit of an echo chamber. So from our perspective, it's really crucial that we spend on that kind of those investment strategists that can come in and present to the committee and ensure that we are questioning our house view sufficiently. So that is a huge part of our process is that research, is the data. And that investment committee that takes place every month is a very, very rigorous, nearly day-long meeting that goes into a lot of detail on the current macroeconomic backdrop. We then separate the portfolio implementation decision because we believe that it's best to kind of frame the house view before we then think about the portfolios. And then from a portfolio management perspective, we look at how we can express that house view within the underlying portfolios.
So you have generally around five different risk categories.
Yeah.
Those investment committee meetings, is that individually reviewing each one in terms of asset allocation?
Yeah.
And fund selection?
Yes.
How does that actually work?
So we have the top-down investment committee, and that's that committee meeting that takes place over nearly a day. But then after that, we have the implementation meetings, and those sit separately to the investment committee. And that's where we look at all of the underlying portfolios, the active portfolios, the passive portfolios, and we look at how we want to implement the house view based on the risk profile, because what is definitely not a one-size-fits-all approach. And sometimes, if we're looking to add inflation protection within portfolios, for example, within the higher risk portfolios, we can do so through infrastructure or real assets. But within the lower risk portfolios, that's not necessarily what we want to do. We might want to be adding to kind of US tips, for example, which is maybe a slightly lower risk way of doing so.